Hello. Today I'm going to walk you through a statement or a schedule of cost of goods manufactured and sold. Okay. First of all, this is not a financial statement. Okay. The financial statements are still balance sheet, income statement, statement of stockholders' equity, and statement of cash flows. This is an internal schedule that companies used to determine how much they manufactured during this time and how much of that was sold during this time. Okay, the given information here is for 1 month. Okay, so we've got beginning balances in all three inventory accounts and ending balances in all three inventory accounts. And then we have the costs of materials purchased, okay, the cost of direct labor, the cost of manufacturing overhead, and sales revenue. You only need the sales revenue for part B of this problem. Okay, so schedule of cost of goods manufactured and sold determines how much did we put into manufacturing new products and then how much of those were sold. So I'm going to scroll down to the solution here. So when you go back and look at it, what I'll have on the recording is the solution. Okay, so I'm going to scroll down. All right. Schedule of cost of goods manufactured and sold. This format does not change. Okay, so we start with beginning raw materials inventory. How much raw materials did we have on hand at the beginning of the period? Then we add in how much more did we purchase during this time. Okay, so we had 100,000, we purchased another 120,000, which means the raw materials that we had available that we could have used in manufacturing was $220,000. Then we take out what we have left, our ending raw materials inventory of 60,000 to get direct raw materials used, 160,000. So it's always going to be beginning inventory plus what we purchased gives us what we had available minus what we have left gives us what we used. Okay? Then we add in direct labor. Okay? Remember the three components that go into the cost of inventory manufactured are raw materials, direct labor, and manufacturing overhead. Okay? The overhead in this one was given. Okay? So we add in the direct materials used. We add in the direct labor. We add in the overhead to get the total manufacturing costs. This is how much costs we actually incurred during this time. Now, when we are making inventory, we are pulling the cost of the raw materials, the cost of the labor, and the cost of the overhead is going to go into work in process while we are in the process of manufacturing. So the total manufacturing cost, $323,000, is going to add into the beginning work in process. So what we had in our work in process are partially completed units at the beginning of the time period. Okay? That gives us total work in process inventory. Subtract out the ending work in process gives us the total cost of goods manufactured. Okay, cost of good manufactured means This is the cost of the things that we finished during the time period and moved to finished goods inventory. So the cost of goods manufactured plus the beginning finished goods inventory of 78,000 gives us the cost of goods available for sale of 376,000. Subtract out the ending finished goods inventory, what we have left of 80,000, and we get cost of goods sold for $296,000. Okay, now, if this seems familiar, it should be. When we did inventory for merchandisers, we only had one inventory account, but we started with beginning inventory. We added in the purchases, which gave us the amount of goods that were available for sale. Okay, take out the ending inventory to get to the cost of goods sold. So we're doing the same process, but we have to pull more things in a manufacturing environment. Okay, sales revenue was given in the problem of 380,000 minus the cost of goods sold that we calculated in this schedule gives us the gross margin, which is the answer to part B. Thank you.